muy bueno, muy profesional. Hello, everyone. Happy Friday to you guys. And I'm so excited to welcome you to another promising edition of the Forex Morning Mastery. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. It's Friday, the last trading day of the week, and we all know, for those of you who have been with me for a while now, you know how important such days are. As psychologically and technically, we expect that majority of market participants will be rounding off on their trading activities ahead of the weekend, and most of the times we see situations where they start closing on some of their positions, making closing in, taking some profit off the market ahead of the weekend. And this usually reflects on the chart in such a way that price action begin to move in the opposite direction of the prior leading price action. So technically, we are expected to begin to see some reversal patterns on the charts today. So we are going to be taking all this into consideration while we review the current market conditions. And of course, we had the hawkish statement coming in from the Federal Reserve Chairman yesterday as regards to the possibility of another interest rate hike before the end of the year. This is another dynamic that has sent some momentum into the market, especially in favor of the US dollar. So we are going to be taking all this into consideration while we review the current market structure today. So I'm very excited to be with you guys this morning. For those of you who are joining us for the first time, you are highly welcome on board, and I'm very sure you will be wondering what this session is all about. Well, as technical traders, we gather here on a daily basis, come together as a community and engage in follow-up and reviews of our current positions in preparation of both the London and the New York session. Well, during the course of the weekend, I usually share with the public my plans ahead of the new week in video templates. And during the Forex Morning Mastery, we come here to review the 1 hour time frame, do a follow-up detail, and see how we can position ourselves strategically for the week. And for those of you who have not watched my videos during the course of the weekend, well, the week is already late, but if you still feel like you want to watch these videos, the links are right in the description box of this current video you are watching, so you can check them out after the live session. And this session usually kickstarts 8:05 a.m. UTC, 9:05 a.m. West African time. So I recommend that you stay tuned in during the course of the session so that you don't miss out on the insights that we will be deliberating on today. And the main focus of this session, of this program, of course, is to equip you with the knowledge and skills necessary to make informed trading decisions independently. So the more time you spend with us here in this community, the better you will become at comprehending our analytical approach and utilizing the information gathered here to enhance your own trading decisions and strategies. So once again, I extend a warm welcome to you. So with that being said, here we will be diving right into the business, and as usual, the first thing we normally do during our Forex Morning Mastery is to check on the economic calendar, as we want to keep tabs with the fundamental factors that will be influencing the market sentiment today. And of course, we know how important this is, as these fundamental factors often manifest on the chart in technical patterns and price movement. And by monitoring the economic calendar, we can identify potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information needed to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after these economic events. So for this week, based on the asset we have been monitoring, our focus on the economic calendar is on the United States and the United Kingdom economic docket. Now, for today, Friday, November 10th, we have a handful of impactful events from both the United States and the United Kingdom economic docket. And in fact, in the last 3 hours now, we witnessed some features from the United Kingdom, and which is most importantly the GDP data coming in from the United Kingdom. And of course, we all know how important this data is, as it provides us an insight into the overall health of the UK economy, impacting investor sentiment and of course influencing the trading decisions in the market. And it also tells us how well the economy has expanded in the last quarter. And if we look at the previous quarter for the month for the pounds, we saw that it expanded about 0.1%, and the expectations for today's data was minus 0.1%. So economists were actually expecting a contraction in the economy, but surprisingly and beyond expectations here, we saw a 0.2% expansion, which came in beyond expectation. And of course, this is a very, very positive data for the pound sterling. So we are going to be looking at the current market structure to see how participants in the market had reacted to this event and how we intend to capitalize on the next course of action ahead of the weekend. Then we also had another one, the industrial production and the manufacturing production sector, which gives us an insight into the manufacturing sector and the industry in the United Kingdom. But the data here isn't that impressive at all, as despite the expectations that there will be an expansion in the sectors, the data that came in this morning came quite below expectations here. So with an economic expansion of 0.2%, which reflected in the GDP data, but a downside in the manufacturing and industrial sector, we have a mixed reaction, mixed data from the United Kingdom. So we want to see how the market had reacted to this data and see how we anticipate the next move. Then later today, we look forward to another very impactful event from the United States economic docket, and that is the publication by the University of Michigan, that is the Consumer Sentiment Index. And for those of us who don't know what this is all about, this is a data that gauges consumer confidence in the economy. And this, of course, directly impacts on the consumer spending and economic growth, hereby influencing market sentiment and assets from the United States economic docket. Now, from the previous data that we have here for the month of October, it came in at 63.8, and economists are projecting 63.7, which is a little bit lower than the previous data. That is, there is expected there will be a little bit of contraction in that regard. So let's see what the actual data is going to be like today. So this data here is coming in about 6 to 7 hours from now. So we all know that the anticipation of this major event usually affect the market sentiment, which in the long run will reflect on the chart as price action. So as technical traders, let's dive right into the chart and let's see how the market is right now and how we intend to capitalize on the next move. I see your comment, Fred. I see your comment, Jonah Aruna. Good morning to you guys, and glad to have you around with us this morning. So the next asset we are going to be looking at this morning is going to be the USOILSPOT. Of course, this is what we usually start the week with. And on the USOILSPOT, we have an interesting situation going on in the market right now since the beginning of the week. Remember that we have been selling the USOILSPOT, giving us over 1,000 pips in profit on multiple sell entries that we had during the course of the week. However, during the Asian session, that is this morning, we begin to see some buying interest resume in this particular market. And could this be a platform that will incite an uptrend scenario, especially as we get prepared for the weekend. So are we going to be seeing some profit taking activity happen today that might result in a bullish traction today? Well, we are going to be taking a technical dissection onto that. And another thing I would like to state here before we go into the technical aspect on the USOILSPOT is the recent recovery in the US dollar, which has a tendency of influencing this market. And of course, we know that the dollar had increased in the last 12 hours, which is as a result of the hawkish comment made by the Federal Reserve Chairman yesterday as regards to potential rate hike again coming up before the end of the year. And for me, I think that this recovery in the US dollar has a tendency of affecting the USOILSPOT by inciting selling momentum to the downside. So let's take a quick dissection of the current market structure by starting from the beginning of the week. Let's see how the week started for us in this community and what led to the decisions we made. And of course, this will also give those of us who are joining for the first time a background knowledge of how we got to where we are today. Now, on the 1 hour time frame, remember we usually analyze the 1 hour time frame. So if you do want to have a background knowledge of how we got to this point, that is a top-down analysis of this asset, then I will encourage you to watch my video on the USOILSPOT. The link is right in the description box of this video you are watching right now. Check it out so you can have a better perspective into how we got here. So at the beginning of the week, it was more of a consolidation phase. Remember, we saw price action initially confined within the $81 area and the $80.65 level to emphasize the level of indecision at the beginning of the week. And you know how we use our flat channels whenever we identify them. We exercise patience and wait for either the breakout to give us an opportunity to buy or the breakdown to give us an opportunity to sell. Though at the beginning of the week, it was more of buying as we saw price climb up, breaking out of that our $81 area to inside about 100 pips move a couple of times before the sell momentum came in. And of course, we did move our stop losses accordingly, taking out with a modest size of profit or at a worst case scenario break even, depending on where you placed your stop losses. Then price action continued to drop to the downside, breaking down that support line of that range, triggering our first sell position for the week. And since that moment, we have been selling the USOILSPOT. And remember, we had multiple entries like the $80 area. We also had at the $78.80 level, that was on Tuesday. Then fast forward to Wednesday, we also added one more position before yesterday we begin to, I think yesterday Wednesday, this is Wednesday right here. We also added one more position here on Wednesday, and during the live session yesterday, we begin to notice some bullish traction, and of course we did said that we will be buying above the $75.85 area, which of course still the bullish momentum here still looks promising at this point in time. So for those of us who have been part of this profitable journey since the beginning of the week, well done to you and kudos to you for being on standby to capitalize on this move. Now, what are we going to be doing right now? For those of you who are with me on both my TradingView and Telegram platform, you definitely must have gotten an update as regards to how we are going to be managing our positions for today. And though we already started seeing this bullish traction started yesterday, and in fact we were taken out of all our sell position as at yesterday, and I told you all that the only condition that will make us consider selling the USOILSPOT is for price action to take out all the buy positions at that lowest point price action has been for this week, that is around the 75 or the $74.90 area, which became a platform for buying opportunities yesterday. And the only condition I made mention here yesterday is that we want to see price break through this level, retest of structure to incite a downtrend move, which of course never happened. Now, in that regard, we mentioned that we are going to be buying because of the fact that we noticed higher lows in this market. Price was consistently finding higher lows after testing that lowest point at the $75 area. So in that regard, we positioned ourselves just right above the $75.85 level, as you will see right here. And in fact, we got that position triggered at the breakout retest of structure. And in fact, price moved over 100 pips in our favor before we got taken out at break even, or a minimum of 50 pips, or at break, worst case scenario, break even on that one. Then price came back into structure, giving us another opportunity to buy here. So we still hold on to the bullish bias on the US All Spot as long as price still remains above this demand zone we identified around this area. So we are going to exercise patience. We currently have a buy position running at this point in time. We'll exercise patience and see how the market will react to the Fed's chairman's hawkish statement yesterday during the UK, and of course during the US, the New York trading session. Then if price continues to climb, then a breakout retest of the $76.80 area will welcome more buy position. And if price continues to find new highs at the breakout of the $77.40 level, we want to be adding more positions to our existing trade. So this is what we'll look out for to continue to maintain this bullish bias here. So let's mark out those levels on our chart, mark out the trend line, which will definitely be a guide in making an informed decisions today. Now, in as much as we're looking out for buying opportunities here, we cannot just ignore the potentials of sellers. Of course, it has been a very strong bearish momentum since the beginning of the week, and considering the Fed's hawkish statement yesterday, there's chances that sellers could also come into the market to push price further to the downside. And what is it that we want to see on this chart that will make us feel comfortable joining a bearish momentum at this juncture? Well, since we have an ascending trend line, though price is still above that support line, that demand zone we identified around the $75 area, well, I still hold on to the idea of selling below the structure, that is price action, taking out all the buy positions there to give us an opportunity to trade. However, if we consider the distance between the trend line and that point, it's close to 100 pips that we have there. And in that regard, I'm of the opinion that we can actually join a bearish momentum even before the breakdown of that temporary demand zone happens. And if we are going to be doing that, we want to see price take out that ascending trend line first of all, break it to the downside. Then I want to see something like a retest of structure to truly confirm that the breakdown is valid. And this would reflect on the chart as the inability of buyers to climb back above the ascending trend line, and of course reflect as continued selling pressure to incite a downtrend move. And in fact, if we begin to see lower highs and lower lows, this is a very good sign that sellers will be coming in. And then if price goes on to break down the $74.90 level, then we want to be adding more sell positions to our existing trade here. So the only condition that will make us consider selling the US All Spot today is for a breakdown and a confirmation before we jump into any positions here. But if price still remains above the ascending trend line, we remain bullish and look out for more opportunities at the breakout of the $76.80 level. So these are my views here on the US All Spot today. So let's see how the market is going to be reacting to both the ascending trend line and the $75.85 level to determine what our next line of action will be. But trust me, I will be with you in the comment section of both my TradingView and Telegram platforms to give you updates on what's and how we are going to be managing our position based on the structures we see on the chart. So if you have any questions whatsoever as regards to my explanations or as regards to the setup, feel free to let me know in the comment section. So as usual, I will be taking the next 10 to 15 seconds off to see if there are any questions whatsoever before we move on to the next asset on our watch list. All right, so in the absence of no questions, I want to assume that we are on the same page, and in that regard, let's move on to the next asset on our watch list. But if you still have questions, feel free to drop them in the comment section. So moving on is the GBPUSD, the cable market. Of course, we have an interesting sell position going on right now in the market. And during the Asian session, we saw a little bit of consolidation phase going on in this market, which further emphasized the level of indecision going on at that point in time. And coupled with the fact that we had some futures coming in from the United Kingdom this morning, we want to see how the market participants have been has reacted to this event. Are we going to be seeing an uptrend scenario come in, or price will be going further to the downside despite the positive GDP data today? Let's look at things from a technical standpoint. Let's see how the week began for us all in this community and what led to the decisions we made. Now, since the beginning of the week, remember that we have been selling this asset, and in fact, we initially had a range identified between the 1.239 and the 1.23650 area, which emphasized the uncertainty at the beginning of the week. And of course, this uncertainty here usually gives us a range to work with, where we wait for either the breakout of the range to give us an opportunity to buy, or the breakdown of the range to give us an opportunity to sell. Though we were buying at the beginning of the week, remember we had about 35-40 pips after price did break out of that resistance line at the 1.239, but that bullish opportunity never lasted, as we saw bearish momentum come in. And of course, if you had moved your stop losses accordingly, you must have been taken out at a worst case scenario break even, and of course depending on where you placed your stop losses. Now price continued to the downside, breaking down the support line for the first time this week, triggering our first sell position, and since that moment we have been selling the GBPUSD. And remember that we also had multiple entries. We had a breakdown of our key level for the week at the 1.23 area. We also added one more position during the Wednesday's early hours, where we saw price break down the 1.22750 level. The trend line, which gave us an insight into the strength of the sellers in this particular market. However, while we were trying to project what our plans will be for yesterday, we acknowledged the fact that we saw a potential reversal pattern in the form of a head and shoulder. As you will see here, we saw this structure formed yesterday, and in fact we were thinking of a breakout retest of that 1.23 area, which happens to be the neckline of that reversal pattern, to incite an uptrend move. But unfortunately for buyers, that never happened, as we saw price continue to drop to the downside, breaking down the 1.22750, giving us a bearish signal. Price came back to retest structure to incite a downtrend scenario. And for those of us who took advantage of this opportunity, well done to you for being on standby to capitalize on that move. And as it is right now, it is very, very necessary for us to move all our stop losses and secure the current sell position. And from the look of things here, I will be suggesting that anywhere within the 1.225 and the 1.224 area seems most appropriate to lock in our position on this sell position we have here. And remember that while you're trying to move your stop losses to secure your position, you do want to be given enough breathing space for price action to move around. So while we have a well secured position at this juncture, what is going to be our next line of action for today? Are we going to continue selling the GBPUSD, or are there chances, considering the fact that today is the last trading day of the week, where majority will be rounding up on their position, closing in their position, taking in some of the profit of the position? Are we going to be seeing a reversal setup that will break out of that descending trend line to incite an uptrend scenario? However, before we go into the details of how we are going to be managing our positions on the GBPUSD today, I would like us to see what things are looking like from an holistic perspective, that is scaling up a little bit into the higher time frame. And to do this, I want us to be looking at the 4 hours time frame. And here on the 4 hours time frame, remember that we talked about how important this current structure is in determining how we are going to be managing our move. And the most dominant factor about this structure on the 4 hours time frame, after taking into consideration the nature of price action in the last 2 to 3 weeks, is this 1.233 area and the 1.23 level, which happens to be our key level. And we acknowledge that this area had been a very strong selling niche in this market, as we have seen multiple times how sellers had always negated all attempt by the buyers to break through this area. This happened here. It also happened during the last week of the month of October, until finally this level was broken to the upside at the beginning of this month. And after noticing the breakout of that supply zone for the first time in the last three weeks, it was a clear sign that we are likely going to be seeing an uptrend scenario happen from this current structure. And from a technical standpoint, whenever price action breaks out of a structure, we expect that price will come back to retest the structure to incite an uptrend scenario. Now, we had a couple of structures here that was broken. The first one here is the ascending trend line, which you can see here. We marked out here. We saw how price broke out of that structure with an engulfing bullish candle, and of course we saw price break out of our key level, which happens to be the supply zone there at the 1.23 area. And technically a retracement into structure will be welcoming the expectations that we want to get ready to join an uptrend move. And we saw price drop into the structure. We saw it break down back into the supply zone, breaking down the ascending trend line, pushing price further to the downside. And for those of you who are with me at the beginning of this week, or you have watched my video on the GBPUSD, remember that I laid emphasis on the fact that that zone between the 1.2300 area and the 1.2200 level is going to be a center of focus for this week, as we are likely going to be seeing some consolidation phase happen around that area before another wave of momentum will happen. Is it going to be bullish? Is it going to be bearish? We don't know. But I did mention that we are likely going to see that. And in fact, it was exactly what has happened here. As you will see, price action is currently trapped within the 1.23 and the 1.2200 area in the last 3 days now. Our center of focus for today is going to be within this range, and in fact, depending on the direction of the breakout of this range, will be giving us an insight into where price will be going in the nearest future. Now, as it is right now, we are going to exercise patience. There is an indecision. How is the market going to be reacting to the GDP data? We don't know yet, but we still look forward to the consumer sentiment index from the US economic docket, which is something I think majority in the market are looking forward to. As you will see that we have been witnessing some consolidation phase just exactly around that level at the 1.22200 area since the Asian session. Then I would like to project this ascending trend line also to capture these lows here, and if we do that correctly, we have something like this. And I would like to thicken this a little bit to emphasize its importance. And as you'll see, price action, we have this low here, and of course we have price action back into that structure. This for me emphasize how crucial this juncture is, and if price continues to the downside, breaking down the 1.22200 level and that ascending trend line, this will be a beautiful opportunity to add more sell positions to our existing trade. However, if price action at this crucial juncture evolves into a double bottom structure or any reversal pattern we can think of, then this might likely incite price respecting the ascending trend line one more time to incite an uptrend move. So if we at any point in time today identify a reversal pattern we want to be marking out the neckline, as the breakout of the neckline will be validating that reversal pattern so we can join the uptrend move. And if price continues to climb up, breaking out of the 1.2300 area, which happens to be our key level for this week, then we want to be adding more positions to our existing trade. Now, with the information we have here, let's scale back down to the 1 hour time frame. Let's see how participant in the market has been reacting to the 1.22200 level since the Asian session today. Now, scaling back down into the 1 hour time frame, it is quite clear that price action had been trapped within a range, as you will see, between the 1.22300 level and of course the 1.22120 area, giving us an indecisive phase going on here. Now, whenever we have a range, you know how we do it in this community. We want to exercise patience and wait for price to either break out of the resistance line to give us an opportunity to buy, or the breakdown of the support line to give us an opportunity to sell. And with the way things are going right now, throughout the Asian session, there are signs of buying concerns happening in this market. So for me, I will just suggest that we look at the resistance line of this range. Let's see how the market will react to that area. In fact, in the last couple of attempts by the buyers to break through that area. So let's see if they will be successful in breaking. We are going to be labeling this area the 1.22300 level, so you do want to be marking out these levels on your chart, as we will be needing it to confirm if truly buyers will be gaining traction today. So let's mark this one out, and I would like to place this at the top right hand corner. So let's see if we are going to be seeing a breakout of the structure. Now, for me to join a buy opportunity at the 1.22300 level, I want to see confirmations happen here. So a breakout of structure, retest, and continue buy pressure here, revealing that sellers are finding it difficult to drop further to the downside, will welcome buying opportunity. And if price action breaks out of that descending trend line, then I will feel very comfortable joining an uptrend move. And in fact, we have multiple levels here that we will be using to guide our bullish opportunity in this market. So let's see how this will play out in the next couple of hours as we look forward to this consumer sentiment index from the United States economic docket. Now, in as much as we're looking out for buying opportunities, you know how we do it in this community, we also want to keep tabs with the potentials that sellers could still push price to the downside. And interestingly here, you will see how the support line of that range shares a confluence with the ascending trend line we spotted on the 4 hours time frame. And in fact, if price action does break down the 1.22120 area, price would also have broken down the ascending trend line, giving us signs that the trend line may no longer have the capacity to continue to negate the bearish attempt, and of course welcome the idea of selling the GBPUSD today. So breakdown of the 1.22120 area will be welcoming selling opportunities. Now, I remember I told us all that for those of us who still have a sell position running, kindly move your stop losses accordingly. So if price breaks down the 1.22120 area, we have a sell stop order right there to capitalize on the downtrend move. Now, there are two ways to which we can capitalize on this move, depending on where you are with us in this community. Now, for those of us who are part of the profitable journey so far this week, you can afford to place a sell stop order below that structure, and of course have your stop losses right above the previous high here. That is between 20 to 25 pips thereabouts on that one. And let's join that bearish move to the downside. And if it doesn't work, we know that we are only risking some of the profit we made so far this week. However, if you are new with us and this is your first time taking a position on the GBPUSD with us, then you have no leverage, so you want to be exercising patience after the breakdown happens, waiting for confirmation like a retest of structure where we see that buyers are finding it difficult to break out of the 1.22300 area before we can finally join that bearish move to the downside. So this is the only condition that we have here that will make us consider selling the GBPUSD today. So you can see how crucial this current structure is, as our center of focus for today is basically between the 1.22300 area and the 1.22120 zone, where we, depending on the direction of this breakout, will give us an insight into where price will be closing ahead of this weekend. If you have any questions whatsoever as regards to this current setup, feel free to let me know in the comment section. So as usual, I will be taking the next 10 to 15 seconds one more time to see if there are any questions whatsoever, while you can also use that time to mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions for today. So I see your comment here, Princess Aboluwekwe. Good morning to you. Glad to have you around. Happy Friday. And how are you doing today? All right. So in the absence of no questions, I want to assume that we are all on the same page. And in that regard, let's move on to the last and final asset on our watch list for this week. All right, so the next asset on our watch list for today is my favorite, and that is the XAUUSD, popularly known as the gold spot. And in fact, we had the buy position triggered during the New York session yesterday, and at this point in time, I'm already out of all buy positions as selling pressure was observed, taking us out of all the existing buy positions we have here. And I do hope you are already out of your positions. If you have done that, well done to you for being for doing that. Now, the price of gold is currently struggling to maintain the bullish momentum that started during yesterday's trading session. And the outcome of the Asian session also reveals that there's been some profit-taking activities going on around that area, which for me, I want to consider to be a retracement of that impulsive move that started during the New York session yesterday. And from a technical standpoint, I still want to hold on to a bullish bias here, as the current market outlook still looks very, very bullish, considering the bullish impulsive move that broke out of that descending trend line that has been supporting that bearish momentum since the beginning of the week. However, it is worth noting here that the upward trend may be limited depending on how market participants react to this current structure. And in fact, if we take into consideration the hawkish statement by the Federal Reserve Chairman yesterday as regards to the potential of another interest rate hike before the end of the year, this of course is favoring the US dollar. And of course, we're beginning to see how the US Treasury bond yield has increased in momentum, especially after the first Chairman's speech yesterday. And this will be undermining the potentials of buyers rushing to this safe haven asset called gold. Now, in this situation here, it is very, very important that we will exercise a lot of patience to see how we are going to be capitalizing on the next move, and especially that we have the Michigan Consumer Sentiment Index coming up much more later today. This could give us cues into how we are going to be positioning ourselves. Now, let's look at things from a technical standpoint, of course, and see how the market started this week and what led to the decisions we made. Well, at the beginning of the week, let me zoom it in so that we can see things clearly. So at the beginning of the week, it was more of a consolidation phase for the first 4 hours as we saw price confined within the 1,993 level and the $1,987.50 area to emphasize the uncertainty that gripped the market at that point in time. And in fact, this led to price breaking down the support line of that range and of course breaking down the ascending trend line we spotted on the higher time frame. And this of course was a beautiful signal that price wants to be going to the downside. We saw price break down the structure, retest, and we actually joined at the breakdown retest of the $1,982 level. And since then we have been selling, and remember that we had multiple entries as well, like the 1,971. We also added more positions at the breakdown of the $1,964.25 area. And during the Wednesday's trading session, we had some other sell entries, like the breakdown of the 1,962. We also had the breakdown of the 1,957, and of course the breakdown of the $1,947.50 area during the New York session yesterday, giving us these massive profits we had on the XAUUSD. So it has been quite a very interesting week for us all yesterday. And if you remember vividly, during our live session yesterday, we talked about the potentials that buyers could also come in, and that the only condition that will make us consider buying the XAUUSD is if price will take out this descending trend line, which was exactly what happened exactly about, I think, about a couple of hours into the New York session. So we saw price moved about 120 pips in our favor before this whole bearish momentum come in. Now right now you shouldn't be in any buy positions right now, because price action has taken us out after moving our stop losses accordingly. Now, with the way things are going right now and considering the fundamental factors behind the scenes, how do we intend to capitalize on the next move? Now, if we look at the structure from a technical standpoint, especially after considering the impulsive move that broke out of that descending trend line, well, technically we do expect that as soon as price breaks out of an important trend line as this, we expect that some point in time we might likely be seeing a retracement phase happen, maybe back into the descending trend line, test it, and then inside an uptrend continuation. Well, this is still in the pipeline. We don't know if that is going to be the case, but I'm of the opinion that we can actually take advantage of that retracement phase since price has been bearish since the beginning of the week, and then depending on how price reacts to the trend line will now determine if we are going to be adding more sell position or getting ready to buy the XAUUSD. So at this point in time, I'm beginning to see something like a reversal pattern that might incite this retracement move. Now look at what I can see here. We can see price find new high here, and then price dropped into the structure, and the inability of buyers to break out of the previous high here gives us a situation where price appears to be transitioning into a reversal pattern in the form of a double top structure, where the $1,957 area will be serving as the neckline of that structure. And it appears that we have a breakdown of that neckline already, and price is retesting the structure in the last couple of hours right now. So anywhere below the 1,957 area will give us comfort to join a bearish move, and let's see how far it will go. Will it get into the trend line, then incite an uptrend move, or are we going to be seeing price break down the trend line to incite a downtrend continuation? And in fact, we have about how many pips that is? That's over 150 pips to capitalize on if price continues to drop to the downside from there. Now we have multiple entries here as well. We have the 1,953, which could also welcome more selling opportunities here if price continues to drop to the downside. And we also have the $1,944.50 level, which happens to be the lowest point price action has been for this week. If price drops and break down the structure, retest it, we want to be adding more sell positions to our existing trade. Now, if price now gets into this area that is around the descending trend line and the 1944 zone, please, you do want to ensure that you move your stop losses accordingly and secure your position. Now, you want to be asking why that is. Well, first of all, remember that we had this buy pressure here. This is the lowest point price action has been for this week before the breakout of that descending trend line happened. And if price action will come back into the zone, it's going to be an area that has a memory for buying power, which interestingly also shares a confluence with that descending trend line. So as soon as price gets into the structure, we want to be moving our stop losses, secure the position while we wait and see how market participant will be reacting to that area between the 1945 and the 1940 area to decide if we are going to be adding more sell position or getting ready to buy if we can see reversal setup unfold around this area. So at this point in time, let's look at how far this retracement phase will go before possibly another bullish momentum will happen. But if it so happens that we get taken out of the sell position and price action breaks out of this descending trend line that I was able to spot here, then I want to consider this as a trend continuation pattern, which of course looks something like a pennant here. Now, from a technical standpoint, we expect that a breakout retest will be welcoming an uptrend move. So I'm not going to be considering buying unless price breaks out of this descending trend line and of course the 1957 area. And if price continues to climb and find new highs at the 1962, the 1970 will continue to add more buy positions to our existing trade. So let's see how the market will play out here. We are at a very critical structure in this particular market at this point in time. So with our center of focus for today is between the $1,957 area and the 1953 area. It's about a 4 pips range. Let's see how the market will react to the structure, and depending on the direction of price actions, breakout or breakdown will be welcoming, will be giving us an insight into where price is likely going to be closing for this week. So this is my simple view here on the XAUUSD. So I encourage you to mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions for today. So let's see how the market will play out. It could take about 2 to 3 hours before something significant forms on this particular chart. If you have any questions whatsoever, feel free to let me know in the comment section. So I will be taking the next 10 to 15 seconds to wait for your questions, if there are any, while I also round off on our session for this week. And if you have found this content helpful, please, I appreciate your support. Kindly support the project by giving the video a thumbs up. Your likes are very valuable to me, and in fact it also helps the algorithm push the video to a wider audience of traders who may find this content beneficial to them too. And thank you very much as you do so. And if you haven't already, I encourage you to follow me on this channel for more of this insightful content. By subscribing, you will always get notifications whenever I upload new videos and commentaries on this platform. And since we are heading into the weekend, I usually prepare for the next week. During the weekend, of course, I share my videos on this platform in public for you to have an idea of what we are looking at ahead of the first Forex Morning Mastery of the upcoming week. So if you're subscribed already, you'll definitely get a notification as soon as I publish new videos as regards to our plans for next week. So if you have questions, feel free to let me know. I will be taking the next 10 to 15 seconds. And for those who have supported this channel so far with your likes, thank you very much. And for those who are yet to support, please support the project by giving it a thumbs up. Thank you very much as you do so. So I just dropped the link to the XAUUSD live window in the comment section. So you do want to click on that link, click on the notify me button so you can get notified as soon as I come online for the XAUUSD live window, which usually kickstarts 5 to 10 minutes into the New York session. So for those of you who are joining us for the first time and do not know what the XAUUSD live window is all about, well, this is a platform that was born out of popular demand from community members here, where we come together during the New York session to monitor real-time price action of the XAUUSD asset during the New York session. So it usually lasts for about 5 to 7 hours, depending on the activities that happen during the New York session. So click on that link, click on notify me button so you can be part of that session and see how we anticipate new positions, and of course how we also secure our positions accordingly. So in the absence of no questions, I want to assume that we are all on the same page, and in that regard, I want to wish us all the best of luck today. It has been a wonderful moment with you guys. We were able to attend to 3 major assets throughout the course of the week, which includes the USOILSPOT, the GBPUSD, and of course the XAUUSD, all of which we did very, very well. The USOILSPOT, we were able to scoop in over 1,000 pips on that one. On the XAUUSD, we roughly had about 400 pips, 500 pips thereabouts, and on the GBPUSD, we really did not have any significant traction, but we were able to close in with about close to 100 pips on that one. And let's see if we're going to add to what we have made so far this week today. For those of you who are joining for the first time, I do hope you are able to gain 1 or 2 things from what we discussed here today. And in fact, I do encourage you to be part of the subsequent editions, as the more time you spend with us in this community, the better you get to understand our analytical approach and eventually be able to use the information you gather here to make your own independent trading decisions. So once again, I welcome you on board, and I look forward to seeing more of you during the Forex Morning Mastery at the beginning of the week of next week, as we come again to have a fresh new look at the financial market. So on this note, I wish us all the best of luck once again, and remember that we do not want to get too excited in our trades. Excitement is not a friend of this business at all. We already have structures marked out on our chart. Let's allow our structures to mature before we jump into any positions. And very importantly, ensure that you have a well-defined risk strategy that will guide your positions going forward. So on this note, I wish us all the best of luck, and do have a wonderful weekend, everyone. Bye-bye.